Welcome, everybody. This is Gabe Velazquez here with you from transparenttrading-solutions.com. I am back on YouTube and really excited to share some things with you. We are going to do this once a week. Today's topic is a timely topic, and that has to do with the options market. We just had data from the Chicago Board Options Exchange indicating to us that we have record amount of volume in the options market. And a lot of it has to do with the Reddit stocks, the GameStops, and all that, meme stocks, whatever you want to call them. So there are a lot of new folks coming into the options markets. A couple of little things I want to cover with options. I've been doing, I've been trading options for over 25 years, and I want to share a couple of things that may be helpful for you in your quest to make money in trading options. The first thing is one of the main things in options is the liquidity of an option. So what does that mean? How many open, how many options are open? We call that open interest. How many options are traded every day? That obviously changes as we get, a surge of people coming in. Obviously, the volume will come in. One of the things that's interesting, though, if you've been observing or if you understand a little bit about how market makers trade options, is the bid ask. And so, you may look at a stock like, for instance, I don't know, a great example would be something like Netflix. Huge stock, lots of options traded, but you look at the options and they have a very wide spread. What is that all about? So you notice if you buy an option, you always have to pay the offer price, which is usually higher than the bid price. That's where the sellers are. And so, for instance, if you bought Netflix calls at $2 and the bid was $1.50, well, that would put you at a disadvantage right away because you would have to sell that option back for 50 cents lower than what you paid. And depending on how many options you do and so forth, you can see that could be a little bit of a challenge. So looking at the bid ask on an option, in my estimation, in my humble opinion, is actually more important than the volume itself. And what a lot of people coming into the options market don't understand is, it's a big stock or there's a lot of volume in it, but you have to understand how market makers operate in this market. It's a whole different ball of wax than you're used to in the stock market. So that's my tip. My two tips for you today: look for volume, make sure you have a tight spread in your options. And what that means is, typically, 10 to 20, even 15 cents between the bid ask is acceptable. But if you can get it much tighter than that, that would be much better. And that will also help you improve your profits because, you don't have to make up that big wide spread in order for you to be profitable. So I hope this is helpful. Put some comments down below if you have any comments, and we will talk to you again soon. Take care, everybody.